Welcome to this special edition celebrating NPS Diwas with the HDFC Pension and Pension Fund Regulatory and Development Authority, PFRDA, the regulatory authority for pensions in India. Retirement is not just about stepping away from work. It's about stepping into a phase of life with dignity, security and freedom. In this episode, we explore how the National Pension System, NPS, and annuity plans are empowering Indians to retire with pride by creating a sustainable income for the future. Joining us for this conversation are two leaders who represent both vision and execution in this space. Mr. S. Ramanan, Chairman of the PFRDA, and Sriram Iyer, Managing Director and CEO of HDFC Pension Fund. Together, we'll explore how retirement planning is evolving, why NPS is becoming a cornerstone for financial security, and how individuals can take charge of their future today. Welcome both of you on the show. And sir, my first question will be to you because NPS as one of the investment instrument, I really want to understand retirement being a very crucial goal which a lot of Indians so far traditionally think about when they are done with all the financial liabilities in their life. The kids educated, their loans have gone, and now it's time to think about our retirement. I really want to understand how PFRDA is taking NPS a few steps ahead and making it one of the very crucial goals. In fact, the first goal that you should be lining up with your first salary that you get.
I think you've given all the answers. That is truly very correct. NPS is at the core of financial planning. And therefore, if people were to understand it the way you did, we are on the right track. So it is essential for anybody starting off their work life, be it an organized sector or unorganized sector. You have to plan for the future, and that has to start today. The biggest reason for that is that we must grow rich before we grow old. And the only way to grow rich is to allow your money to work for you, which is the power of compounding. And I think that, if you ask me, is the single biggest feature of NPS as compared to any other financial product. Because the rules are relatively strict. You can't withdraw too much of your money. And therefore, till whatever time you decide. So I fully agree with you. The world has changed a lot. We're no longer in that era where people retire at 58 or 60. So people have their own plans, their own way of looking at the future. But we need to therefore allow for NPS as a product to be sold to different segments, to different needs, to different plans. And that's why I think we have ushered in this reform. Where PFRDA will no longer take a call on what is the kind of scheme that will be run under the NPS umbrella, but this will be left to the pension funds, and it's for them to better understand their customers and to be able to create schemes, design them for different segments. Because I think every segment has to be catered to. We are a country where we are probably going to have 20 to 21% of people above the age of 60 by 2050. And those numbers are therefore large. They need to be helped in their future financial planning. Sure. So just taking a leaf from what sir also answered, I want to understand pension funds are allowed to decide, because the NPS as a product over the years I've seen has become very flexible, very investor friendly as well. You're representing a pension fund. I want to understand how are you looking at the flexibility part and also looking at the changes in the dynamic of your subscriber base. What is more to do, because NPS is the only go-to retirement investment option that you have right now dedicatedly, apart from traditional investment instruments, okay? Here you get a benefit of equity, different asset classes also. Depending on your risk appetite, you can select the amount of exposure. So what more can be done? Over the years, since so many developments we've seen on this product, you as a pension fund, what are you aiming at? What kind of subscriber base are you looking at? And how much is it now so far?
So as we speak, Kavita, we are just ahead of upwards of 26 lakh subscribers at HDFC Pension. As you would know, we are the largest private sector pension fund manager, managing close to 1.4 lakh crores. You'll be surprised to note that there is 38% of this base is actually subscribers below the age of 35, which I think is a telling example of the fact that, you know, our perception that this product is something that is the youngsters do not understand is probably misplaced. I think there is a large number of younger population amongst, at least amongst the corporate salaried, employee workspace, we are seeing a lot of interest that is there in that community. They understand the power of compounding. I think we need to, sort of give credit to this so-called new generation. The fact is that they understand equity, they understand financial literacy is improved significantly. As you pointed out, I mean, there are numerous changes that have happened over the years in NPS, and the recent slew of changes that are being unleashed, and that were announced earlier in, towards the end of September. I mean, those are, in my opinion, going to be game changers for the industry. The reason why I say that is because the amount of flexibility that will be there to address, and as Chairman Sir said, there is going to be significant flexibility available to each of the pension fund managers, and HDFC Pension, of course, is as I said, very, very excited about the opportunity that it unleashes for us, and the fact that we'll be able to create products for personas, right? For instance, one of the large focus areas for us is corporate salaried individuals, right? And we manage, NPS, corporate NPS for close to 4,000 plus corporates. So how do you create products which suit each of these, in some sense, personas? And that's something that we're very, very excited about. Our ability to actually create products which will, we were talking earlier about 100% equity, or it could even be 100% fixed income for somebody who's close to retirement and wants to deploy their superannuation money into let's say, an NPS kind of a product. You can actually create a product which is best suited for somebody who doesn't want to take any volatility risk towards the latter part of the career. So the amount of flexibility that this offers to us is humongous, and I think it's obviously the ball is in our court as a pension fund managers and as distributors of pension funds to make sure that we take it to the masses. I think just one final point.
Sure.
The issue with NPS has largely been around communication. I think we have failed to communicate the power of this product by simplifying the narrative, and that's something that we've been focused on, quite heavily over the last 2 to 3 years. And I can tell you that we have seen reasonable success. And I was telling you about the 38% base out of the number of subscribers that have chosen HDFC Pension. That's one of the reasons, right? We've been able to possibly, make some progress in terms of the kind of narrative and the kind of communication that we've been able to. People are able to relate to it. Right. We need to do a lot more, of course.
Exactly. So very impressive. But then, so same kind of subscriber base. I really want to understand, and even from PFRDA point of view, which areas still remain under-penetrated? Okay, here I also want to talk about the unorganized sector. I also want to talk about tier 2 and tier 3 areas where retirement as a goal is really not thought about. Okay, also because they have money from generations coming, and they have their own businesses, they rely on that, and not only NPS, they don't believe in a lot of investment instruments. For that matter, even a risk cover like insurance. Okay, so your investor mentality and behavior also matters a lot. So any steps that PFRDA plans to take in these unpenetrated areas, or maybe the unorganized market and tier 2, tier 3?
So in fact, targeting of, let me say, India and Bharat. So, we normally get focused only on India, and we forget about, a large number of people living in the country who are not in the urban metros.
Yeah.
We have put, as part of this scheme, an additional incentive to the pension funds, where they have another 0.1% of AUM available to them to meet the higher distribution costs, to be able to bring in newer subscribers into NPS. So if one were to look at very rough numbers, we should be able to get something like 50 crore people under NPS in the next, let me say a decade, maybe 15 years, but definitely before 2047, which is a target for all of us. So in financial planning and financial products that go towards it, I think we have to be very clear that the informal sector includes self-employed, which could be doctors and lawyers in urban cities, but actually it includes and means the large number of small businesses that run across the country. But we have to be able to have that flexibility in our system to be able to reach out to this very large informal segment, within which I will also count a lot of agri and agri products. So, the so-called agri-allied sector, which is one of the classifications, the number of people involved in that are very large. They probably have the money to be able to invest. So I think I completely buy your point that we need very, very large scale dissemination, communication. We have a wonderful tagline called NPS Zaruri Hai. The citizens a choice of very good products.
Right.
Finally, they have to take that decision and get into the product that is good for them.
Right.
So we are very clear that distribution is the key. We have to make sure that we, along with our stakeholders, the pension funds, the other banks which help us distribute the products, the common service centers that are available in the villages with their village level entrepreneurs. This is more than a lakh of them available across the country.
Okay.
So we know that the availability of a distribution backbone is there. It can become increasingly digital, but it's also there in physical form. We have to be able to use it.
Absolutely.
I think that is really the larger challenge for the regulator, apart from the fact that you have to be able to allow for better design of the pension product as we move along.
When it comes to implementation as a pension fund, what are the challenges or what are the benefits that you are looking at now, especially considering the digital approach that people are opting for their investments?
So firstly, I think it is not very well understood that the entire NPS onboarding journey and ongoing servicing and management is entirely digital, and it has been digital for a while.
Okay.
Right? Okay. So you really don't need to physically go across to a point of presence or a distributor or a bank to really get your NPS services delivered. There are 3 central record keeping agencies in the NPS ecosystem. You log into their website, you download their app, and actually you can execute practically every transaction that you would want, right from contribution, which takes less than 5 minutes if you have an Aadhaar card which is linked to your mobile number, to choosing the pension fund manager, to choosing the scheme, to making changes in your asset allocation, 4 times in a year, changing your pension fund manager once a year, and so on and so forth. So there are a slew of services that are available to individuals digitally even today. And I think to the point that Chairman Sir made earlier about how do we make this product exciting enough for various constituents? So the digital infrastructure exists. The task is to make sure that we're able to identify different personas. Now, despite the fact that there are close to 20,000 corporates that have empaneled for NPS, the adoption levels are abysmally low. Why is that the case? Why is it that there are only 7% of employees across all of these corporates who have signed up for NPS, given the fact that this is the 80CCD2 benefit is an exceptionally powerful tax dispensation that is not available under any other. This is available under the new tax regime to the extent of 14%. Very powerful. Why is it that we are not able to generate enough interest? But how do we make this make it more widespread? How do we make sure that, so therefore your ability to create products even for specific corporates which may have a very large employee base, why not, right? Create something which is specific to a particular corporate which has a specific kind of a persona in terms of age profile, and the numbers justify it for the pension fund manager to come up with a product which suits the requirements of that, let's say, corporate, right? So the ability of the pension fund manager to do numerous things has now, in combination with all the other things that we spoke about, the digital infrastructure and the fact that this is an exceptionally flexible product, I think opens the door for us to, and of course the fact is that ultimately the product in itself can be very flexible, very attractive, but you need a distribution community to be able to take it to the last mile. And that's where I think this whole dispensation of saying we will, the overall cost of the product is now being looked at rather than fragmented costs, which the customer was also not able to really understand what this really adds up to. And even after this, it remains one of the cheapest actively managed market-linked products, right?
It's cost effective.
It is extremely cost effective, right? So the fact is that there is new products that pension fund managers will be able to craft based on their assessment of the opportunity at a cost which is going to be exceptionally low. So I think it's the best of both worlds that is being made available to individuals, and I think I am very, very optimistic as a pension fund manager, and I think lot of conversations happening with our regulator in terms of making sure that we're able to do more.
Sure. I want to ask a question on the schemes and the response. I mean, either of you can answer this question. So far, we've tried to make it very investor friendly, and now we have a higher exposure ratio of investment in equity. We also have a lifestyle fund where you can decide, and if in case you're someone who is volatility averse, you can decide, a combination of equity and debt, etc. How much more experiment can we do on the scheme level? Because that is going to be one of the main attractive area for the kind of subscriber base that you've just mentioned, having those gig workers and millennials and those young first-time earners. So what can be done? What will be done?
So let me just clarify something which is important, because we have the existing schemes, and we've loosely called them as common schemes because they'll always exist.
Yeah.
We also have the schemes which the pension funds will devise and design and then roll out. So those are the other customized schemes. So what we've also done is that we've said with the existing common schemes, people may choose more than one scheme also. Today, people have to choose a single scheme.
Right.
You're allowed only one scheme in the entire setup.
Yeah.
So I think that itself will allow people to put their money into certain products which suits them at different stages of life. Make sure the customer understands what he's getting into. So today the schemes that exist have, as you said, there's nothing called 100% equity. So equity stops at 75% as a max, and then it tapers down. So what we're really moving to a situation where if I have a particular scheme today, I can buy any number of schemes tomorrow from a pension fund, and I can balance my requirement both from an accumulation risk point of view. I can be low, moderate or high in the accumulation phase.
Right.
I also therefore need to have more options when it comes to how am I getting the money back from my wealth. I think that is something which the regulator is really looking at.
Because it's NPS Diwas, and we have something like an NPS Pathshala already going on. So I really want to understand, or in fact, I really want you to talk to our viewers and help them understand the way to secure your future is to have your investment in NPS right now. Why?
No, but NPS Diwas is a moment to think back. At least let me tell you from a regulatory point of view, it's a moment when we should be in introspection as to what we have achieved and what we have not. So I think NPS Diwas is both celebratory as well as introspectory, and I think that's important. But from a customer and from a citizen point of view, I think it's important that people realize there's several different financial instruments, including real estate and gold, and apart from the financial assets which we're talking about, and therefore having a mix of all of them is very important.
True.
I think that's really the basis of financial planning, risk diversification, and therefore NPS must be understood as your retirement product and the product from where you receive your retirement benefit. And therefore you have to view it as a partner for life. I mean, it really takes you all the way. In fact, in the recent amendment that we have brought about, I mean, it's not an amendment as of now, but after getting the public comments, then we will go ahead with the amendments based on the comments. But what we're saying is that the exit age from NPS, which today is 75, can be pushed all the way up to 85 years, because the longevity statistics of India also indicate that people are going to live till about 82 to 84 years for men and women respectively, just 6 to 7 years down the road from today. So, that's the kind of projection that we've already seen. So, we must understand that, starting at an age of 25 or 30 or whatever it may be, you are then continuing all the way up to 85. And therefore, what Sriram had earlier mentioned becomes even more relevant, that from a succession point of view, you're looking at NPS also as part of your succession planning from a, in a citizen point of view and from you to your family. So it is a lot that we should be able to bring into the NPS, family and the kind of products. But each one will require its level of education, awareness, I think that really for a country like ours is
That's
very
needed.
important.
Yeah.
So more, probably from a regulatory point of view, we'll spend a little more on time and effort and money on trying to increase financial awareness and education.
I think just adding to what he said about the fact that NPS forms a part of an overall financial portfolio, and this should form, as I said earlier, the foundational part of a financial portfolio, because the aspects around and the benefits around NPS, it deserves to be the foundation of any financial portfolio. My point is that, and I've said this numerous times in the past, one of the things that I see is that people hear about all of these things. So as per NPS Diwas, I'm sure there is going to be a lot of visibility around the fact that NPS is a product with this benefit and feature packed.
Yeah.
But I think the step that one needs to take is to start. Even if you're able to start small, that is good enough.
Good enough.
All we expect people to do, and this may be a fantastic day to start this journey, which can actually, transform your lives, as I said earlier. And I think starting that journey today, I think nothing more you could do than making sure that you're securing your future with a product which is absolutely, in my opinion, one of the most well-designed product suited for retirement.
So all the best. It's time to get NPS on the center stage and the main element of portfolio planning and financial planning and aligning it with your financial goals. Thank you so much for being on this show today. Thank you so much. All right. So as we heard today, retirement planning is no longer optional. It's essential. With tools like NPS and Annuity Plans, every Indian has the opportunity to retire with pride, financial security and peace of mind. A big thank you to Mr. S. Ramann and Sriram Iyer for all of their insights, and to all of you for joining us. Until next time, let's remember the best thing to start planning your retirement is today. Goodbye.